Hi, I'm Dennis Rodkin. I write the Deal Estate column in Chicago Magazine, and this is DEQs, where I answer readers' real estate questions. Larry, a commercial real estate executive in Chicago, asks, how would you expect Logan Square's values to appreciate relative to others that you call adjacency neighborhoods? During the recession, it seems most neighborhoods have more or less remained constant in terms of quality of life, but Logan Square has been an anomaly. In the face of economic chaos and then malaise, no fewer than 20 restaurants, bakeries, and coffee shops have opened. Today, the neighborhood offers much more amenities than it did in 2007. Do you think this will have an effect on how this neighborhood rebounds? Larry, I totally agree that Logan Square has performed very well since the crash, and I also agree that it's been adding a lot of amenities during these years of downturn. That does help solidify its foundation, which really ought to help future growth. In our last full-size real estate charts, which were published last April, Logan Square had done better than most of the city. 2011 single-family home prices were down 29% below 2006 levels. They rose slightly, just less than 1% between 2010 and 2011. Attached prices were down 20% in 2011 from 2006. They did not rise between 2010 and 11, they fell. Those declines, though they sound big, are significantly less than what happened in most Chicago neighborhoods. And the presence of that one increase, that pop-up between 2010 and 11 in single-family home values, though it's small, sets Logan Square apart from most neighborhoods in the city that still were not seeing that when we put that data together. You already know it's a great neighborhood. Along with that retail growth you mentioned, there's great transportation, both CTA and access to expressways. There's the loveliness of Logan Boulevard. There's beautiful older housing and a very good sprinkling of new construction. And we have to keep in mind, though the economy has struggled in these years, it hasn't been dead. For employed younger adults who are looking for housing during those years, Logan Square has all of those attractions we mentioned. It's working well on many fronts. It's less expensive than its neighbors to the east. It's not on the lakefront, but the lakefront is within reach. It has the social cachet of the restaurants and the fact that your friends and classmates are already living there. Success breeds success. You've got friends who move there, new restaurants open, they invite you there, you end up moving there, the cycle perpetuates itself with further people. Also, we should keep in mind that Lincoln Park, Lakeview, they haven't dropped as much as most neighborhoods, so they're still too expensive for some buyers who may, if things had happened differently, been pulled out of Logan Square's market and into the Lincoln Park and Lakeview markets. But because they can't yet afford that, they're still in Logan Square, which is not a bad thing because they look at this neighborhood and they say, of course I should be paying attention here, regardless of what's in those higher rent neighborhoods. So looking ahead, yes, it's really good for Logan Square. With less retail vacancy and fewer foreclosures than many neighborhoods, it has less of a hole to dig itself out of. That should help in the first few years of the recovery when people will still resist buying in a place that seems risky or untested, and Logan Square seems like a real solid, proven place. Thanks for your question. Send me more at dennis@rodkin.com.